W's in the chat. Hello, guys. Yeah. We're back again. Welcome to Market Time with Ricky. And yeah, TradingView is back, by the way. So, very good for us. And this is also a new, template for me, like a new color template on my TradingView. Pretty nice, right? Purple and black. So, yeah, I've pretty much done everything like planned out tomorrow or analyze the market to gather up a bias for tomorrow for these four markets. For these four markets, yeah. So, like, in the scale of 1 to 10, if I was to rate the one with the highest potential of like doing a trade tomorrow, it would be around among USD CAD, USD CHF, Pound USD, and Euro USD. They have to travel at least 40, at least between 35 to 40 pips for them to actually get to my POIs, you know. So depend on the volume tomorrow. We might see that move happen, or price could just sell, or, continue selling. I have my zones marked out here. You can see my fair value gaps, and pound USD similar. We have to come towards this POI here. Anyway, but I'm excited about USD card. I've been looking at the pair for some time now, and it looks very good. Like this is a classic setup, but it still has the potential of being invalidated. Why? Because we're trading from a higher time frame key level, higher time frame support. I don't mind it. This is like the result of the change. So let me get this off my screen and get with the program. Anyways, higher time frame key level is being traded from right now. So there are some bullish vibes, but if this weekly trend is to continue, I think it should sell, or it validates that my fair value gap and give us a break of structure on the 4 hour time frame, which validates the shift in bias from bearish to bullish. So yeah, we're bouncing off of this zone. So this area here now 4 hour is detrimental. It tells us, defines the future of what USD card will be this week and probably next. You know, if this level holds, then we can really see a good sell off. I'm not saying this level should necessarily hold all the way to creating a new lower low in the 4 hour. I'm not saying that, but I'm just hoping for a valid enough rejection from here. A very valid enough rejection takes us probably down somewhere here. Oh my god, I forgot about this. I pen to like don't mind me. All these things, yeah. Takes us around here. Probably the fair value gap. Sorry. Probably this fair value gap here or the one below it, gets used as support to keep the price going up. But I'm just trying to see if I get a confirmation here, I'll just bet on price retracing back towards this level and possibly continuing the bullish movement caused by the weekly, or it fails and sells and we get a new lower low down here. So exciting stuff for USD card. Let's go to lower time frame, 15 minutes. On the 15-minute chart, you can see I marked out the range and low. So I'm looking forward to it. Like this is not yet a valid low until this high gets taken, but I want this high to get taken by tomorrow, you know. But I need to see I want to see a market structure shift, which is this basically, and just a break of structure, a clear one. Obviously, there can be liquidity swept in between this internal and external range, which this could possibly be. This could be like one of the engineered liquidity that gets swept before. This could be an engineered liquidity here that gets swept before this happens. But ultimately, I want a break of structure. Ultimately, I want a break of structure, which should give me a valid confirmation for my entry. So going short on USD card, let's look at USD CHF, USD Swiss franc. It's very similar to USD card, funny enough. It is bearish on the weekly time frame, very clear, very obvious. I also tried to see if I could find any possible area of support. Very hard to find here, so like it still looks very bearish. I don't really see a valid or strong enough reason for this market to reverse from this current trend right now. So, so this is what I'm saying here now. Weekly bearish. On the daily time frame, we see that price is also very bearish. I mean, obviously. But we also notice that yet today, at least price has filled this gap here, which is good because I want price to take advantage of this fair value gap and reprice all the way up here, which is my POI. 4 hour time frame. 4 hour time frame, we notice liquidity sweep, gap fills. We still have this large inefficiency candle here, which has no reason to not get filled up, to not get repriced. And we have this key level here, but my main focus is the fair value gap as well. But I'm also very interested in seeing how price reacts to this key level. If I can get a break of structure around here, I'm entering the market. If I can get a break of structure around my POI, I'm entering the market. Because this thing with fair value gaps nowadays is not so good. But let's get into some value. Let me leave the video with some value, and that value is what is fair value gaps and how to trade fair value gaps. Fair value gaps. I've been talking about fair value gaps for the past 7 minutes. I've been showing you guys illustrations. Um, I'm sure everybody understands what fair value gap is. When the market is, you know, moving in one direction so aggressively that it leaves unfair advantage or unfair chance for the sellers to, for example, in a buy case scenario, it leaves unfair chance for the sellers to get into the market. And if it's a selling scenario, it leaves unfair chance for the buyers to get into the market. So that's why it's called a fair value gap because it's not giving us fair value, which eventually, due to the algorithm of the market, the price has to reprice up towards or to the fair value gap level to give sellers opportunity to take part or opportunity to participate in the market. That's the quote unquote definition. But I take it as face value, and it is a very notable pattern in the market that price always react to. The fundamentals, the definition is not really so important, but price is very likely to react from a fair value gap level. Especially last year, if you notice, fair value gaps were very good. But the thing with all these trading concepts here they tend to fade fast. The market trend changes, and so does what the trend respects and disrespects. Years ago, other blocks were very good and very reliable, but now not so much. You can't really depend on an order block, higher time frame or lower time frame, and you'd be like, oh more this trade and this other block gets up, like this other block, move price for me, or this other block made me edge my risk better, or something like that. Nowadays, other blocks get really violated, and they're mostly seen as liquidity. But fair value gap is still very potent, it's still very strong. That's the thing. So you always have to learn and keep yourself, you know, in what is trending right now. So right now, what you see trending, you see CRT trending, you see key levels trending. That's why I incorporate key levels and CRT also, MSNR or SMT. Those are still trending. Liquidity and structure are constant. Liquidity and structure are constant. So you have to understand liquidity, you have to understand structure, and you know multiple time frame analysis, obviously. Well, yeah, this is basically what a fair value gap is. This is what a fair value gap is. A three candle formation that the middle candle, the second candle, has a gap left by the close, open and close of the first candle and open and close of the last candle, the third candle. So as you can see here on the chart, this is a perfect example of a fair value gap, and this is a perfect use case for a fair value gap. You see, candle one has a short wick, candle two has this massive body, which is also an indication for institutional funds or institutional liquidity being part of a move. Like this is an institutional candle. A fair value gap candle is made from two candles and one institutional candle. There has to be an institutional candle for a fair value gap candle to form. There has to be institutional liquidity in the market at that point for a fair value gap to form. Most of all these gaps you see is when big money is moving the market. So anyway, the fair value gap is formed here, and you see I use my fair value gap in higher time frame where they are more potent, they are stronger in the higher time frame than lower time frame. But I wait and expect a reaction or a reversal of the market from the fair value gap. So I go to a lower time frame like 15 minutes to scale and find my entry. Similar to the trading plan I have for USD card. Similar to the trading plan I have for USD card. Go to a lower time frame and look for your entry. Your entry can be a key level or it can be a fair value gap. But I like to take different conferences while marking out my entry. My entry, like your entry is something you need to focus on. Like after you learn all the strategies, if you don't know how to enter the market, you are always going to be screwed. If you don't know when and where to enter, if you don't know when liquidity will be resting or when you are potentially positioned as liquidity, you will never make it. So focus on your entry, no matter what strategy you are using. Make sure your entry is as accurate as possible, and also make sure your stop loss is as guided and relatively safe as possible, but not go and carry like exaggerated stop losses. Reduce your risk to reward. Your risk to reward should never be less than 1:3. But this market can give you on like infinite reward when it comes to can give you 1:10, can give 1:8. Just depends on how precise you can be. Not even what the strategy you are learning or whatever. It depends on how precise you can be. And when precision is in play, when sniper entries are in play, and all these elements are very present in your trading, the risk to reward is just comes naturally. You'll be getting 1:8 like it's nothing. You won't feel like you work hard for a 1:8 or a 1:7. It just comes because you followed your rules and you did it so well, so precise, you know. So yeah, that was all for market time with Ricky's. Let me write that down somewhere. I need to find a way to like. Well, I'm still editing this. This is taken on you. But anyways, market time with Ricky. Episode one completed. Yo, like let's fucking go, baby. W's in the chat. Catch you guys on the next episode. Make sure you like and subscribe. Make sure you are in tune with the market. Never stop learning and keep it real. Peace.